What's up, traders? Hope you had a good week. Today I wanted to go over liquidity and liquidity sweeps and how they can be used in anticipating the direction of the market. So if we dive into what fractal highs and lows are, here you can see in a 3 candlestick formation, these are the bodies, these are the highs, these are the lows. This is a fractal high because the wick is higher than the one to the left and one to the right. On the flip side, this is a fractal low because its wick is lower than the one to the left and the one to the right. Now, even though this candle's high is higher than the one to the left, it's not a fractal high because there's no candle on the right to determine if it's a fractal high or not. Now that this candle has formed and the wick was below this high, this is now a fractal high. Why is this important? Well, below the fractal highs and lows is where traders put their stop losses. So if they were going short, they put their buy stops here. And if they were going long, they put their sell stops here. So this is where liquidity remains. So when we see price intercept the fractal lows or highs, so for example, this fractal low is intercepted by this low, and we've closed above, we tend to see price deliver the opposite way, going upwards. So the same goes for the bearish example. Price has intercepted this fractal high where liquidity remains, and we can expect price to deliver to the downside afterwards. So if we head over to FX replay and go into some examples, okay, so we're looking at GU as an example, and we're going to just stick to the 15-minute time frame, not worrying about, higher time frame flow, etc. So you can see we've got liquidity being built up here and liquidity down here, as we've got the fractal lows here and also here, and we've got fractal highs here. So if price then intercepts these highs and lows, depending how we're breaking, I can expect price to go the opposite direction. So if we just skip to the next candle, you can see that we've hit this liquidity. So this is a liquidity sweep or a raid. So I can expect price to drop. If we drop down to the 1 minute, you can see we've left inefficiencies here, and we've got these fractal lows here. So perhaps when price closes below these fractal lows, my entry can be here and my stop loss there. So you can see price is now broke below this fractal low. So I can place my limit. And I've targeted this blue line here, as if we jump back onto the 15-minute time frame, you can see liquidity resides here. So if we play a couple candles, so now that we've swept this liquidity, if on the lower time frame I have the signal to buy, I can enter my long position. So you can see we started to displace up here. So perhaps my entry can be at this inefficiency there. And my target again would be where the previous traders were selling short and they left their stop loss here if they haven't already exited the market. So I'm going to place that limit there. So you can see we're tagged in here. So my target is going to be up here. And you can see that target's met. If we then skip to the next session, we're back on the 15-minute time frame now. And you can see we had built up liquidity here and here. We then swept it there. Now, me personally, I wouldn't be long from here just because of the way that price is closed. So I'm going to target this low here and see if we intercept it. Okay, so you can see we've intercepted these lows and we've closed below. So I'm just going to target these lows here. Okay, now we've swept this low and we've closed above. So So this is telling me that price could go up if I get the entry reason on the lower time frame. So back on the 1 minute, we've got this fractal high here. If we close above it, then I'll enter my long position there and my stop loss there. Okay, so you can see we didn't close above it, we closed below it and swept the liquidity. So price went the opposite direction. I'm just going to skip to the next day. Okay, so you can see here, we've got all this liquidity here. We then had price sweeping this liquidity. So if I get an entry reason on the lower time frame again, we've got this fractal high here. We've got inefficiencies here. So you can see we broke above these highs. So my entry is going to be here and my stop loss is going to be below here. What am I targeting? I'm targeting the next fractal highs. So you've got some here, 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 and up here. And I'm going to shoot for standard 2R, which brings me up here. Depending how price reacts to these liquidity areas, I will close or hold my position. So let's market execute that. You can see we've hit this liquidity here, but we've closed above. So this is showing me that price still wants to reach upwards. We've got more liquidity here. Depending on your risk appetite, you can enter longs again there. And you can see we've swept this liquidity. Last example, now that we've swept this liquidity, I'm going to go on the lower time frame, see how price is behaving. We've broke below and we're leaving inefficiencies here. So my entry can be here, my stop loss can be there, and my target is going to be a standard 2R. So if we place the limit, so you can see this sell position didn't play out. It hit more inefficiencies here and then worked its way up. So this is why considering higher time frame flow is important when developing a bias. If higher time frame flow is bullish, then I wouldn't be selling. Or you also have to understand that it's a probability game, so not every trade is going to be a win. So if you've got any questions about that, just let me know in the comments below, and I'll see you next week.